the little trades. Now, understand we are trading a $10,000 account, but our base trade, our base position is 0.5 mini lots. So that's 5 micro lots. That's a $5,000 position. You probably need about $80 or so to open that trade in terms of margin. Now, we just had a global close all deals, meaning that the position that were opened reached a total aggregate profit of 100 pips, give or take. The close all deals is a market command, and depending on the broker, the volatility of the market, there might be a little bit of slippage here and there, but the bottom line, it's going to be pretty close. So what you see, so far we're 113 pips in profit in our closed deals. Right now we're about minus 49 pips in our open trades, and this is the next trading cycle. The software had placed a total of 14 trades. We see the summary of the long position and the short positions. We're currently net short about 0.9 minis, and the market is moving. You see over here the 3 lines, as I mentioned. You see the market went up a little bit, then down, then up quite a bit, then it was kind of flat and flat. So that's why right here the equity curve on both the open, closed, and the combined trades are kind of flat. Market is not doing a whole lot. We can speed it up a little bit, but in the beginning, I just want you to kind of get the feel for this. Now, over here on the very right-hand side, we have a total of maximum drawdown. The simulator will calculate from the highest position how much we went into a temporary loss at any given moment, and you will see that as the red line gets painted together with the blue line over here as well. We've got our current closed deals, which is 113. That corresponds with this number over here in the closed deals window. We have our float, which is the open positions, and those are right over here, and that number is the same as this number over here. It's just a little difficult to watch it both at the same time, and this is our summary, and this is our total lowest equity that we have achieved since the beginning of trading. So now what I will do, I will speed this up a little bit. I'll disable the drawing because then it will go a little faster. And you will see that the orders will be changed as the market moves here a little bit. Right here we have another close all deals. Because we were net short, the market went down, so we closed all deals. Now, next cycle, software opens trades. We have another close all deals. And as you see, the equity line, which is the most important one, is the green one and the blue one, are going up, meaning that we're making money so far. We're about 327 pips to the good. In the open deals, we're right now 80 minus 37. This is changing very, very fast. We are also, notice, on the 4th day of trading. So far, we've gone through 4 days. So this you can see how this happens very, very, very quickly. Any questions? I'd be happy to answer at this time.
Joseph, we really have not had any questions come in. I think everyone is really grasping a better understanding, and certainly the visuals are just amazing, and it really does assist with the entire process. So you can go ahead and just continue moving forward at this time.
All right. So what you see down here that we had a little bit of a bigger drawdown, 747 pips. If I look at the lines here, the equity curve, we see that from about here to here. We were in a bit of a drawdown, and that is if you look below, look at the market, you can tell that the market was kind of choppy. It went first at the beginning of the cycle, the market was going up, then it went down, then it tried to go up again, but it was flat, then it was a little more flat, slightly going down, and then it went down until, and basically it doesn't matter where the market goes. We just need enough time. If the market moves, that's a good thing for us. Whether it moves up or down, it doesn't really matter. If it's flat, well, it's flat. You can't really push it or pull it. There's nothing you and I can do. But when the market moves, doesn't matter in which direction, the software will add to the position in the direction of the market, and then even if it is in the opposite position, if the market reverses without reaching close all deals, and as the market reverses, the software will be adding more positions in the more trades in the direction of the market. That's why if you notice in the working orders over here, there's a lot of trades to be filled, a lot of orders to be filled. However, if the market reverses, even these orders will be changed to accommodate the new accommodate for the new direction in the market, right? So let's just speed this up a little bit, and we're on the 10th day of January. 9 o'clock, 10 o'clock, 11, 12 o'clock in the afternoon now. And we're about 150, I'm sorry, well, it's moving, but you guys can see it. Boom, close all deals again. We're up roughly about 579 pips. And boom, we had another one, 682 pips. Now this, I'm saying in the harvester here that this is a moderate strategy. Well, it's a moderate strategy for me. For beginners, this strategy is aggressive as hell. It is an extremely aggressive strategy, particularly if you don't know what you might be getting into. It is recommended that when you first start, you start with a conservative, or at best, or at worst rather, whichever way you want to look at it, the conservative strategy. Don't get this aggressive, because this aggressive strategy can really get into drawdowns that might panic you a little bit. And so far, the only people lose with the software that don't have the patience and hang on till the end of the trading sequence, as we are seeing currently with the flat market that we've experienced over the last few months. Some people just don't have the patience. Yes.
Oh, I was going to say we do have a couple of questions, but finish your thought, please.
All right. Well, some people just don't have the patience, and trading is not for people that are not patient. It is a long-term process. The most successful investors have accumulated wealth not overnight, but over a period of years, if not decades, of consistent successful trading and investing, and that's what we're after. So let's finish drawing the equity curve. So as you can tell, we're looking at a fairly choppy market. But at the end of the trading cycle, the software always accomplishes what it set out to accomplish, and that is to close on this profit that we designate at the beginning of the setup. And we've got times of drawdowns, and you can see that with these valleys of both on the blue line, which is our combined equity curve, and also the red line, which is the open deals equity curve. So we had some drawdowns, but at the end of each cycle, as you can tell, the software closes, and that's where the money comes back home. Okay, so that's what I wanted to mention. All right, Bobby, shoot.
Okay, Joseph, I'm sorry I had you on mute because I'm trying to type and answer as many questions as I can that are not necessarily things that are pertinent to what we're talking about right now. So just a simple question, Joseph, but very important is, what defines moderate, aggressive, or conservative strategies?
Moderate, conservative, or aggressive is determined on what the maximum drawdown expectancy is on that strategy. and the expectancy of a drawdown is defined by a variable that we call trade interval. As you can tell, when we start a trading sequence, we start with one trade, and even I could slow this. I could really slow this down, and you could see the one trade and then the next trade and so on. So the bottom line is the more aggressive a strategy, the more trades will be placed. But the more trades you place, the greater the possibility that those trades will or can go against you. And the more trades go against you, the more trade recovery you have to go into, and therefore you're going to be using a whole lot more margin, as well as the possibility of a drawdown will be increased. Now, on the positive side, when the market cooperates, you are more likely to achieve close all deals or profit targets lot quicker, because if the market runs in one direction, and these FX markets do have a tendency to trend, when the market trends, then the software adds on to the position in the direction of the prevailing trend, so it reaches the profit market faster. However, in choppy markets, that could be somewhat risky.
Excellent explanation, Joseph. Thank you very much. Let's see. Thank you, Stephen, for asking that question, by the way. Mr. Nemeth, are you planning on adding more currency pairs to the hybrid strategy? And can we change which pairs to trade with ourselves within this strategy?
Well, that was two questions.
It was. So I've just thrown them both out there.
All right. The strategy can be applied to any pair, of course. However, one has to be mindful of the volatility of the pair. So, in other words, euro-dollar, if the euro-dollar moves an average of 45 to 50 pips, as it has been lately on a daily basis, I would not even think about trading it, because it doesn't move. If it doesn't move, there's no potential to make money, right? So I look for pairs that have the highest volatility. Now, some people will say, well, that's so terrible because it can go against you. Yeah, it can go against me, sure, but I have mechanics in place that will prevent me from a catastrophic event, number one. And number two, I trade in both directions. I don't really care if it goes against the original trade. As you can tell in the open deals window, we've got 10 trades that are long and almost 20 trades that are short, and these are little tiny trades. So we go into the market just kind of one toe at a time. We start with one trade, and then depending on what the market does, we add to it or we subtract to it, and basically we create these trading sequences that are mathematical, nothing more than really mathematical algorithms trying to combine the profits and the losses from the various directions, from various trades in various directions, until we finally get our aggregate profit. And really, for a human to do this manually, it would be quite impossible. Now,